Welcome back to another video, investors, and today we're going to be talking about dividends. Specifically, what do you do with your dividend payments? I get this question a lot from new investors and they're wondering what is the best course of action to take when I receive dividends from the companies that I'm invested in. So that will be the topic of today's video. Remember, if you like the content, definitely leave a like and share it out to a family or friend that might be interested in investing and or personal finance. And remember as well, if you're not subscribed, please hit the subscribe button below. Help us to get to 1,000 subscribers. I really do appreciate the support as always. So the first question you might have, especially if you're a new investor, is what is a dividend payment, right? What exactly are dividends? Dividends, according to Investopedia, is the distribution of corporate profits to qualified shareholders as determined by the company's board of directors. So basically, a dividend is simply your share of the company's profits. So from time to time, the board of directors of the company will meet and they will decide whether or not it is prudent to pay out a dividend to shareholders of a company. Now remember, when you invest in a business, when you purchase units of stock in any company off the stock market, this includes the Jamaica Stock Exchange, you become a shareholder of that company, and basically what you do is you purchase a very small slice of ownership within that company, right? So think of the company as a big cake and think of each share or unit of stock as a small slice of that overall cake, right? So essentially what a dividend is your share of profits, and how much you get in dividends is determined by how many shares or units of stock that you own in the company. So to put it simple, the bigger portion of the cake that you own is the more you're going to be able to get in dividends. Now, there are two primary things that are going to determine how much money you're going to be able to make from dividends. Now, like I mentioned before, one of the things is how many shares or units of stock that you own in the company. Whenever a company declares a dividend, it will put in its dividend announcement how much it's going to be paying per unit of stock or per unit of share. So what I'll do is I'll put up an example of a dividend payment notice right here, and this one is for NCB Financial Group, and as you can see in that dividend notice, it mentions that they'll be paying 50 cents per share. The second factor that is going to determine how much money you're able to make from dividends is the dividend yield, and dividend yield is an extremely important concept to understand where dividends are concerned, right? So what is a dividend yield exactly? So the dividend yield is a financial ratio showing the return an investor would earn from an investment based solely on its dividend payment, right? So the formula for dividend yield is to divide the dividend amount by the share price, and that would give you the yield. And of course, you'd want to express that in percentage terms. So what you do is you'd multiply that figure by 100. So let's give an example, right? Let's say the stock price is $100 and the company declares a dividend of $10 per share. What you do is you divide the dividend amount, which would be the $10. You divide that $10 by the $100, which is the share price, and you'd get 0.10. Now, if you multiply that 0.10 by 100 so that you can express that figure in percentage terms, you're going to get 10 or 10%, right? So basically, your dividend yield is 10%. And what that means is that if you invest $100,000, you'd get $10,000 in dividends, right? Because remember, $100,000, if each share you purchase is for $100, then that would give you 1,000 shares. And then if you multiply that 1,000 shares by the $10, you get $10,000, right? So that would give you the amount that you would get in dividends. Now, you can actually calculate the dividend yield for a single dividend payment if you want. So using the example earlier for NCB Financial Group, you could use just that 50-cent dividend to calculate what the yield is based on just that single dividend payment. Or if the company pays multiple dividends throughout the year, you can total up all those different dividend amounts and divide that by the share price, and that would give you an annualized dividend yield. Now let's do a real world example for this dividend calculation, just so you can get a better understanding of how you'd calculate a dividend yield, right? And we're going to use NCB Financial Group just the same. So I'll put up a little image here so you can kind of follow us through the calculation. So remember, dividend yield is equal to the annualized dividend divided by the share price, or it can just be a single dividend. You just want to be dividing the dividend amount by the share price basically, right? So in this calculation, we are going to use basically NCB Financial Group's 2024 dividends, right? So all the dividends they paid throughout 2024, and I'll put up another image here on this side of the screen so you can see what that history was like. But basically, they would have paid 4 dividends of 50 cents back in 2024. So 50 cents plus 50 cents plus 50 cents plus 50 cents, that gives us 2 Jamaican dollars in dividends per share, right? And then based on what NCB Financial Group would have closed at yesterday in terms of their stock price, let's assume that that is the price that you bought all your shares at. So on the 13th of August, they would have closed out with a stock price of $39.53 according to the Jamaica Stock Exchange's website. And I'll just pop that up here so you can also see that as well. So basically what we would do now is we would divide that $2 by the $39.53, and that would give us 0.051. And then to express that in percentage terms now to get the yield, we'd multiply that 0.051 by 100, and that would give us 5.1%. And basically what this is saying is that if you invested $100,000 in NCB Financial Group, then for that year you would have gotten $5,100 in dividends. So now that we've explained what dividends are, we've talked about what determines how much you get in dividends, as well as we've showed you how to calculate your dividend yield, what exactly do you do with your dividends when you actually get them, right? And there's basically 3 main things that you could use your dividends to do, to be honest. 1 is you could reinvest those dividends. 2 is you can use those dividends to pay for your bills or your expenses. Or 3, you can just enjoy the money, right? Spend it on something fun, spend it on something that you like. Because at the end of the day, the reason you're investing is you want to make money to either improve your quality of life, to create wealth, or to just, spend that money on things that you want to spend money on, right? Money is made to be spent, money is not made to be hoarded. It's just that you want to invest, you want to manage your personal finances well, and you want to use your money wisely so that you can have money for years and years and years to come, and you can create wealth, you can create generational wealth to pass on, and you can live the standard of life that you want to accomplish, right? But those are the 3 main things that you can do with your dividends. Now, when I first got my very first dividend from Mailpack, and I'm going to put it up on the screen here so you can see what my first dividend was like. The dividend I got was basically $42.50 after taxes, and that's not a lot of money. And this is the first dividend I got back in October of 2020 because I started to invest in September of 2020. So obviously I couldn't really use that money to pay bills or expenses or really do anything fun with it. So what I basically did was reinvested this money. I reinvested those dividends, and that is what I would recommend most people do, because that way you can benefit from compound growth and compound interest. Basically, the compounding effect can take place. And what compounding is, it's the process where you earn interest not only on your principal amount, but also on the interest you've already earned, right? So just to give you an example of how compounding works, and I'm going to put up that example right here. Let's say you invested $1,000 in a savings account with a 10% annual interest compounded yearly. In the first year on that $1,000, you would get $100 in interest, right? So remember, that's the first year. So basically you started with $1,000, you got $100 in interest. Now you have $1,100. In the second year, because you have $1,100, if you get that same 10% return, you're not going to get $100 return. You're now going to get $110. So that's basically $10 more than what you got in the previous year, right? And that's how compounding works. Basically, you're earning a return not only on the principal amount that you would have invested, but also the returns that you would have gained. And the same thing works with any other form of investment, right? If you invest in a stock, you get the dividends, you reinvest that dividend back in the stock. Next time they pay a dividend, you're going to have more shares or more units of the stock. So now you're going to be able to make even more money back from the subsequent dividend payments you're going to receive in the future. Now, to go back to the question of what do you do with your dividend payments, right? Like I mentioned, there are basically three main things you can do. Is either you're going to reinvest that money so it can compound and continue to grow, you're going to use that money to cover an expense or a bill, or you're just going to use that money to do something fun to actually enjoy the fruits of your labor, right? Or the fruits of your investment. Now, like I mentioned, I believe the best thing to do, especially if you're a new investor with a smaller portfolio, is to reinvest that money so you can benefit from compound growth and compound interest. And I'll tell you why. So going back to the example that I gave before of my first dividend from Mailpack, that dividend was just $42.50 Jamaican. Now, that's not a lot of money, and you can't really do much with that, right, in terms of paying bills or expenses or doing anything. But one thing you can do with that money is you can reinvest that money, because when you're purchasing stocks on the Jamaica Stock Exchange, the minimum order quantity is 1 unit of the stock, right? And I believe at the time, Mailpack was trading for maybe $1 something, $2 something, something around that number, right? So basically, what you would have been able to do back then is that dividend that you receive, you'd have been able to use that to purchase more shares in Mailpack. And what that means is that in the future, whenever they pay a dividend again, you're not gonna have 1,000 units of stock like you see in the image right here, but you're gonna have a bit more, right? Maybe you're gonna have 1,020 or 1,030 or whatever. So that means that the subsequent dividend is going to become a lot more. And to date, the largest singular dividend payment I've ever gotten, I'm gonna put it up on the screen here, is from Cygnus Credit Investments, and I got around $16,000, and that was from one single dividend, and they actually paid two dividends annually, right? So I would have gotten $16,000, and I anticipate when they declare their next dividend, which should be anytime around September, October, it's gonna roughly be the same amount should they declare a dividend of a similar or greater value, right? And I would have accomplished that amount from that singular dividend through just continuously reinvesting my capital gains, reinvesting my dividends, like I mentioned, and benefiting from compound growth and having my portfolio build up and grow over time. So I think that that is the single best thing to actually do with your dividends when you receive them, to actually reinvest those dividends within these companies, because like I mentioned, that is how you're going to be able to grow your portfolio. That is how you're going to be able to create wealth in the long term. And who's to tell that down the line, when you build up your portfolio to where you're getting even 100,000 or 200,000 or 500,000 in dividends, no, you can likely use that money to do other things, maybe invest in other ventures. Maybe, like I said, you can use that money to cover different bills or expenses, maybe pay your water rate or your electricity bill or your car insurance or whatever it is, right? Or maybe you can use that money for fun. Maybe you can use that money to go on a vacation, right? Or to plan a trip or to purchase something that you really like, right? So how I view it is that the superior thing to do is to actually reinvest these dividends to benefit from compounding, because over the long term, you're going to get more bang for your buck when you do that. But in my opinion, if you ask me what do you do with your dividends, I would say 9 times out of 10, reinvest that money. But that's it for today's video. If you like the video, definitely leave a like and share the video out to a friend or a family member, somebody else that could benefit from the content. Remember as well, if you are not subscribed, please subscribe below. It goes a long way in helping us get to 1,000 subscribers and helping us to grow the page and motivating me to put out more informative content like this. And as always, I really appreciate the support. Thanks for tuning in again, investors.